Hello, and welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today is October 5th, 2025, and we are looking at a pivotal moment for Bitcoin. The news cycle is absolutely electric with bullish sentiment from major financial institutions. JPMorgan, Citi, and Standard Chartered are all projecting a massive Q4 boom for BTC, with some price targets reaching as high as $200,000 by the end of the year. Much of this optimism is being fueled by record inflows into Bitcoin ETFs, which are being described as the clearest barometer for an incoming breakout. Adding fuel to the fire is the ongoing U.S. government shutdown, which began on October 1st. Unlike previous shutdowns, many analysts now view this political uncertainty as a bullish catalyst for Bitcoin, framing it as a policy hedge and a safe haven asset. However, there is some caution in the air, with some predicting a October crash below $100,000 and others pointing to massive sell walls near the all-time highs. Let's dive into the daily chart to see how this narrative is playing out in the price action. Looking at the bigger picture over the past year and a half, the long-term trend is undeniably bullish. After consolidating in the $60,000 to $70,000 range in mid-2024, we saw a significant dip. This correction found a strong bottom during August and September of 2024, establishing a critical support base around the $50,000 to $54,000 level. That period of accumulation was the launchpad for the incredible rally we've witnessed since. It's a classic example of the market shaking out weaker hands before a major upward move. From that base, 2025 has been a phenomenal year for Bitcoin, smashing through psychological barriers with force. The push through $100,000 in early January was a major milestone that brought in a new wave of retail and institutional interest. We can see the market didn't just move up in a straight line. There were healthy periods of consolidation and pullbacks. Notice the significant volatility in February and March, where price swung from over $100,000 down to the low $80,000 range before finding its footing. This was followed by another strong leg up, which eventually peaked around the $124,500 mark in mid-July. The subsequent months saw the price ranging between roughly $112,000 and $124,000, forming a large consolidation pattern. Now, let's zoom in on the last few weeks, which have been particularly interesting. Here on the daily chart, we can clearly see the price action leading up to and following the October 1st government shutdown. After a drop on September 30th, we saw a massive, powerful green candle on October 1st. The price surged from an open near $114,000 to close above $118,500. This move directly correlates with the news we discussed, where investors appeared to flee to Bitcoin as an alternative asset amid government instability. This strong buying pressure reinforces the safe haven narrative that many bulls have been pushing. In the following days, the momentum continued, pushing the price right back up to test the recent highs. This brings us to the current battleground. Bitcoin is now trading just under the previous all-time high, which sits around the $124,500 level from July. Some analysts are pointing to this price action as a classic cup and handle formation, which is a bullish continuation pattern. The cup was formed from the July high to the September lows, and we are now forming the handle as price consolidates just under the brim. A breakout from this pattern would be technically very significant. However, the news also confirms that there are heavy sell orders stacked around the $125,000 resistance level. This means we are witnessing a fierce fight between bulls trying to push into price discovery and bears defending this crucial level. Let's switch to the 1-hour chart to get a clearer view of this consolidation. Over the last few days, we can see the price has been trading in a tightening range. We have established short-term resistance near $122,900 and short-term support around $121,500. The price is coiling up, which typically precedes a significant move in either direction. Volume has been relatively consistent, suggesting both buyers and sellers are actively participating at these levels. A break above the upper boundary of this range would be the first sign that bulls are gaining control for an attempt at the all-time high. Conversely, A break below the lower boundary could signal a short-term pullback towards the $118,000 support zone. Drilling down even further to the 15-minute chart, we can see the microstructure of this range. This time frame is where intraday traders are looking for clues. Notice the choppiness and the quick rejections from both the upper and lower boundaries of the immediate range. For now, the price action is very compressed, indicating the market is waiting for a catalyst. That catalyst could very well be the upcoming non-farm payroll data, which is known to inject volatility into all markets. Let's head back to the daily chart for our final summary and predictions. To recap, the key price levels to watch are crystal clear. The major and most important resistance is the all-time high area between $124,500 and $125,000. A decisive break and close above this level on the daily chart is what every bull is waiting for. To the downside, our first key area of support lies between $116,000 and $118,000. This zone acted as a recent pivot and needs to hold to maintain the immediate bullish momentum. A more critical line in the sand for the bullish structure is the support at $110,500. A daily close below this level would invalidate the immediate bullish thesis and could open the door for a much deeper correction towards $102,000. So, what can we expect next? Given the powerful fundamental news, record ETF inflows, and the bullish chart pattern, a breakout to the upside seems slightly more probable. I would place the likelihood of a successful break above $125,000 in the coming weeks at around 65%. Confirmation would be a strong daily close above this level, which would likely propel the price towards the analyst targets of $135,000 and even $150,000 relatively quickly. On the other hand, the bearish scenario of a rejection from the all-time high holds a 35% probability. This would be reinforced by a break below $118,000 and especially a break of the critical $110,500 support. A rejection here could trigger significant liquidations given the high open interest in derivatives, leading to a swift move down. Keep a close eye on the upcoming NFP data for a potential volatility catalyst. Thanks for tuning in to Explain the Charts. If you found this analysis helpful, please like, subscribe, and hit the bell icon to stay updated. Finally, a quick disclaimer. This video is for informational and educational purposes only and should not be considered financial advice. Cryptocurrency markets are extremely volatile. Always do your own research and consult with a professional financial advisor before making any investment decisions.